Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Thanks for being with us. Today we're talking about single-tenant net lease investment properties. My guests are Scott Lindstrom. He's with Gerard, their real estate development and construction company, and Nancy Miller. She's a commercial real estate broker selling single-tenant net lease investment properties. And before the break, we were talking about rising interest rates. Look into your crystal ball. Scott, you just want to start us out. Look into your crystal ball and tell us, single-tenant net lease properties, in my opinion, seem to be the sector that could be most quickly impacted by rising interest rates. What does your crystal ball say?
Well, unfortunately, I don't have a crystal ball. It's more of a snow globe.
Snow globe, I like it.
But it is getting more difficult from a developer standpoint to forecast. We look at lead times long before you see things go on the market, Nancy. I mean, we're trying to look at 18 months to 24 months out. So it is somewhat of a snow globe for us. But typically when we see interest rates rise, I mean, I think the single tenant or the cap rates for single tenant properties typically lags at least 6 months behind that. But I think in this current environment, if they do rise, I really don't know that they'll have an impact on them next year.
Next year. So you think it may take a little bit longer?
I think so. I think there's a lot of other factors that go into that, and I think one is right now supply and demand. Mm-hmm. There's limited supply and huge demand for the single tenant product.
Right. Mm-hmm. And people are searching for safe yield, right?
Yes, they are.
And it's a great place to find it, not only just commercial real estate in general, but specifically in this space where it's considered kind of one of the safest areas. I think another thing that's really interesting about single tenant net lease properties is liquidity of, because commercial real estate in general is considered a non-liquid investment, right? But if you want to sell a single tenant net lease property with 10 years on it, I could get that under contract tomorrow if you want me to. And I could probably close it, 45, 60 days, pretty easy, unless you're trying to get more than it's worth. But if you're trying to get a market price, it's pretty liquid. Well, I guess the impact of the rates rising depends on how fast they rise, right? But it's not a one-for-one deal, right? So if a year from now we have interest rates that are a full 100 basis points or 1% higher, it's not going to impact commercial real estate with a 1% change in the cap rate, right? It's going to be smaller than that because of what you said, supply and demand. You got increasing net income on some of these properties. But what do you think, Nancy? What's the impact moving forward? If I'm one of your investors, and I'm concerned about buying a property today at a sub 6 cap, and maybe I think that when I'm selling this property 4 or 5 years or 10 years or whenever, that interest rates are going to be higher. What should I expect? Well,
I think my crystal ball is my crystal ball. It doesn't mean it's accurate, but I think that
it is.
I would suspect that rates probably won't go up more than 50 basis points in the next 12 months as they go up. I may be proven wrong, and I don't think that will affect the demand and cap rates. I think that at a point where the interest rates go higher than 50 basis points, we're going to start to see cap rates have to adjust with that. That's just my thought, because we've got a lot of investors right now in the market who are finding that the cost of money is so cheap that even though they could stroke a check for cash today, they're considering doing financing. The other piece of that becomes, if I'm in a 10 or 15 year lease that has a fixed cap rate today, and my interest rate over time goes up with a balloon, I'm behind the 8 ball 10 years, 15 years from now. So I have to be really, really careful of what I choose to do, whether I choose to do debt leverage on my purchase now. And my crystal ball then now has to become, as the investor, 5 years, 10 years out. And that becomes a little bit of a dicey call.
How many of the investors in this space are paying all cash, and how many people are putting some leverage on it on average?
From my perspective, and you probably know on the developer side what you're seeing, my perspective, I would say that the probably 75% of the people out there right now are paying cash because we have so many 1031 investors out there. But some of those cash buyers are converting over to using debt. The other 25% are clearly using leverage. It's kind of, I don't know what you're saying.
What we're seeing on a lot of the offers that we get in, Michael, is you have the 1031 buyer that's looking for a new property, but the property actually is the sales price is more than what they're trying to purchase. So we are seeing some financing contingencies in our contracts on properties that we're selling.
That's interesting. And it's such a competitive environment too. I guess, are you seeing some folks that are coming in and they're paying cash so they can have a competitive offer, then they're financing it later?
Yes, in fact, one of the investors we worked with this year have purchased several properties. They've gone back now and taken 2 or 3 of those properties and put debt on those properties, and we're in the process of taking the cash money that they got out of that debt and reinvesting it now in other properties. And in doing that, they're seeking a little bit higher risk, meaning a higher cap rate, maybe not as solid of an investment grade tenant to increase their yield. So they might have bought in originally at a 6 cap rate, and now they're looking at 6 and a 6.75 or 7 cap rate properties that are still very good quality properties, but it allows them to continue their cash on cash use of their monies.
You know, that's one of the benefits of commercial real estate in general, especially single tenant, is the leverage and the benefits that inflation can give you on a long-term hold on commercial real estate of putting leverage on it. And then if you add to that the positive leverage that I guess you're still seeing in the single tenant net lease space, right? You're still seeing some of that. I mean, if you're paying a 6 cap, what are you financing the financing portion at today? Is it 4.5? What are you seeing for rates?
In terms of, if I put 60 or 65% down, I will get a 3.9% rate on a 5-year balloon, a 4.25% interest rate on a 7-year, and a 4.5% on a 10-year balloon. And that could vary depending on all kinds of factors.
Well, that's very interesting because that's some pretty good positive leverage. And so that would lead me to believe that as interest rates do go up, that you're going to lose that spread on that positive leverage, and it should impact cap rates and values of these properties.
And unfortunately, what does that mean for you guys?
Well, obviously higher cap rates, less money.
Well, let's talk about some of the activity with tenants today. I mean, it seems like the economy's coming back. Some tenants, especially in the retail world, it seems to be in flux today with online sales and brick and mortar stores sometimes having struggles. But and then there's some stores like high end and low end, they're doing really well, right? So what do you guys see? What tenants are active in the space today, Scott?
We're still seeing a lot of activity by the dollar stores. With the Family Dollar, Dollar Tree merger, I think Family Dollar is going to slow down quite a bit until Dollar Tree gets their arms around what's going on with them. But I just heard yesterday that Dollar General is going to do 900 stores next year, which is pretty impressive. We're still seeing a lot of QSR out there. One of the
quick service restaurants.
Quick service restaurants. One of the new things that we're really seeing are specialty grocery, and while that's not all typically triple net, there are triple net opportunities in that arena.
Okay, well, stay with us. We'll have more on the single tenant net lease investment market, including some more tips. I'm Michael Bull. This is the Commercial Real Estate Show.
The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit creshow.com.